Hello, tradeologists. Well, we did our analysis over the weekend and we came up with two basically potential stocks. Netflix, NFLX, and Avon Products. We've eliminated Avon Products, although we're going to keep it in the back of our mind for a potential gamma trading in the future. And we're going to go with Netflix. We calculated the at-the-money straddle at $2.80 over the weekend. This is Monday morning, and the current straddle at the money is $2.50. So you can see that just over the weekend we lost 30 cents in value on the straddle, or $300 on a 10 contract straddle. So you need to be able to pick a stock in which will trade fairly actively in order to counteract the theta decay that the stock is going to experience as we get closer to expiration. Every single day, let's go over to our analysis tab here for a second. Every single day that goes by in which the stock does not move, we will continue to lose $63. Now we're getting closer to expiration. This is going to be significant in how we make money. So what we need to do is, when we do place this order, we need to consider carefully the theta decay and the current chart. So let's take a look at a current chart. This is a 60-day, 60-minute chart. Now we only have 20 days left to expiration here. Well, actually 18 days to expiration. We do want to get close to that expiration date. We want to be able to do this closer because gamma at this stage, let's see if we can pick up gamma here. Gamma here is highest right at the money, and it does affect our delta. We want it to affect our delta so that we can trade in and out of the stock. So let's take a look at this particular trade on the chart again. Since we only have about 20 days, which is really about this period right in here, that's 20 days of trading approximately. You can see it's moved pretty good, so there's been some opportunities here, and what we want to be able to do, of course, is get into this trade and then manage and trade these swings. So we're going to go ahead and enter the trade. Immediately you can see in our Analyze tab that we are long 179 deltas. In order to get this to delta neutral, as soon as we put the position on, we have to sell 179 shares. Now you can. This is where it really gets interesting at this point. What I like to do is, rather than using the standard mode, I like to go to $2, $5, minus $2, and minus $5 for price slicing. In other words, what will happen to my delta if the price of the stock moves up by $2 or if it moves down by $2. Now I like to set it at $1 increments, so I can go over here and set these at $1 increments rather than $2 increments, and I'm going to set the $5 at $2, and let's see what happens. Whoops, I got to go negative there. Let's see what happens to our deltas as the price of the stock changes by $1. This is really important when it comes to determining the delta of your position, because if the stock moves up by $1, you're going to be long 406 deltas. So you need to sell 400 shares at $28.97. If it drops to $27, you're going to be short 79 deltas. So you need at that point to buy 80 shares in order to get delta neutral. We start out with a position that is long 177 deltas, so we need to sell approximately 170 shares in order to get fairly delta neutral on this position. So what we're going to do is we're going to go over to, let's take one quick look at the chart. I'm going to go over here, I'm going to bring up Netflix, and we are going to sell 170 shares of stock in order to start out our position. That will bring us to a delta neutral position, relatively delta neutral. So now we know that if the stock moves up 1 point, we're going to be long 231 deltas. If it drops 1 point, we're going to be short 262 deltas. At those points, we need to sell. If it moves up $1, 230 shares, and if it drops to $26.95, we need to buy 260 shares. But remember, we're already short 170, so that will affect our deltas as well. Now we're going to go ahead and enter this order, and we're going to do first trigger sequence because we want our straddle to be entered first, and we have to get into that straddle before we actually get short the stock. So let's go ahead and enter that. Well, evidently Netflix is not available to borrow, so we are going to have to pick another stock. Yeah, you can look up here. It says hard to borrow, so our order was rejected because we cannot short the stock. It's very hard to borrow. So I guess we're going to have to go to our second choice, which is Avon Products, and that does happen once in a while. So let's go to Avon. Right up here it does say easy to borrow, so hopefully we'll be in a better position to trade Avon. Let's see, Avon Products. Let's take a look at their chart again over the last 20 days. And this also has moved fairly significantly. In fact, it's up quite significantly right now. 41 cents for the day. Let's take a look at the current straddle. The current straddle is 323. Let's just make sure that is the cheapest straddle that we can buy. We'll go down to the 30s, and we'll go up to the 40s, and it looks like the 35s are in fact the cheapest. Let's go over to our Analyze tab. So this is real world, you know. I mean, we went to do the Netflix trade, and we found out that it's not very easy to borrow the shares. So especially with the new regulations on shorting stocks, you do have to borrow the stocks. Of course, retail investors always had to do that. With this position, we are long 400 deltas on our straddle position. In order to get delta neutral, we are going to have to sell 400 shares.